half hour.
It should be
Yep.
half hour. You're
Yep.
right. You're
Yep.
right.
That's all right. It's not a big deal, but yeah.
Do you want to run the day ahead market one? Wait,
Just a one line.
I
It's
don't
not
know
a big deal.
It's not a
okay?
big deal.
Yeah, it's not a
If
big
I
deal.
can try to cut this. Okay, just in case. Just in case.
Right.
Good luck now. Battery energy storage. Everyone is talking about it. Everyone is modeling it. Everyone is investing into it. But the real question is, how much of this is real and how much is theoretical? To unpack this, we're joined today by Hayato Ono, Japan country manager at Endgame Analytics, an energy and infrastructure focused consulting firm providing tailor-made modeling solutions. Before joining Endgame Analytics, Hayato was at Hexa Energy Services, part of I Squared Capital, where he focused on optimizing battery and renewable portfolios across arbitrage and ancillary markets in Japan. Prior to this, he headed advisory at Aurora Energy Research in Japan, building out their local presence and leading work on grid forecasting and BESS valuation, and has held roles at JP Morgan and SocGen as a quantitative strategist. As a CFA charter holder and a background in financial engineering from UC Berkeley and UCLA, Hayato brings a rare perspective at the intersection of modeling, forecasting, and actual monetization in power markets. Welcome.
There we go. There you go.
Thank you.
Good to have you here. Massively appreciate that. We've known each other for quite some time now. I think, yeah, I don't know if that's going to be like close to 2 years or so. So it's good that we can finally do a little bit of a podcast together. I think that's quite nice. Today we're going to be looking more at the Japan BESS market, and in particular, I want to just touch upon a little bit more on anything from how much is actually connected to the grid and what we're looking at when we're looking at anything from grid queues or queues into the grid sector for batteries. So battery system costs in Japan are roughly 2.5 to 3 times higher than global benchmarks. And factors like local content requirements, domestic manufacturing incentives are likely to influence how these costs evolve going forward as well. Connecting applications for standalone BESS projects in Japan have surged from around 70 gigawatts in mid-2024 to 170.8 gigawatt by the end of 2025. So that's a 2.4 increase after a year. We have this little graph if you want to throw that up there. There you go. So this has also created a heavy workload for TSOs who are tasked with reviewing this volume of proposals. However, only about 0.62 gigawatts of BESS, which you can see here in black. It might be a little bit small here compared to the Grid Connect contracts. But yeah, this is actually how much BESS capacity is actually connected to the grid. So, and this is based on an analysis by the Institute for Energy Economics and Financial Analysis.
So for the listeners on the podcast, we'll be putting a link to the exact kind of graph so you can actually see the huge difference between the actual kind of contract application capacity versus the actual grid connected BESS.
Yeah, exactly. So we wanted to bring you in, Hayato, to also talk a little bit about this. And the first question to start things off is, how much of the BESS story is real versus still conceptual? Or maybe another way to answer this would be, or ask this would be, how much of the conceptual projects do we believe may go through from a percentage scale, and why? Because we have the 28.7 versus the 0.62 here.
Okay, thank you. First of all, I would say, the best market in Japan is, not theoretical. It's been, quite a boom the last couple of years.
Yeah.
But it's also not quite mature,
Right.
compared to other markets,
Right, right.
overseas, for example, Australia, the UK, etc. Right.
Mhm.
So I think there's a gap between, what we assume the models can do and what the theoretical project revenues are
Yeah.
versus, what it really is in reality
Yeah.
in terms of, taking account grid, market, operational constraints. In terms of these numbers, you can see that it's probably actually less than, I believe 1%.
Yeah.
Of the grid connection contracts have actually connected.
Yep.
So this trend will probably continue to go forward in the next couple of years. There's a couple of things that METI has put out these projections themselves for
Yeah.
2040, 2050.
Yeah.
They assume around less than 20%
Mhm.
of these actual connections will actually connect to the
Yeah.
grid. right? So that's actually quite optimistic, to be honest.
Yeah, I would say so.
Yeah, I would say probably 10 to 20% is optimistic.
Mhm.
As you can see, it's actually less than 10% here.
Yeah, yeah,
So
yeah.
I believe this will continue to be the case.
Right, right, right. I know that that Medi, they're also basically trying to figure out how this doesn't continue in this exponential way.
Mhm.
So how to cut down on some of the Grid Connect contracts.
Mhm.
If you're looking at this the statistic right here, you're mentioning like a 10 to 20% would be quite optimistic. If we look at this statistic and we think about the 2050 goal that you mentioned before, we'd be pretty quick to reach that with the Grid Connect contracts here.
Mhm.
Do you think so if you're looking at anything from a percentage increase from December 2023 on the actual grid connected
Mhm.
projects, how quickly do you think this is going to ramp up from let's say this graph and maybe in the next 2-3 years?
So first of all, the project that already won the LTDA tenders,
Yeah.
the round 1 and round 2, so
Mhm.
they'll be coming online in the next couple of years.
Yeah, yeah,
Sure.
So
yeah.
those are mostly confirmed,
Mhm.
unless some operator decides to pull out, which
Yeah.
is possible if you pay a penalty, right?
Yeah.
So
Yeah, we saw this in the wind sector with Mitsubishi, right?
yes, so
So
that's one. The other one is specifically they just announced that Shikoku EPCO,
Mhm.
they just announced that they are pulling out of the ammonia coal firing
oh wow, really?
for their 500 megawatt coal plant. So
Mm.
they just announced it last month.
Yeah, yeah,
So
yeah.
they won the tender
Mhm.
round 2,
Mhm.
but they completely withdrew from it because they've decided that they cannot procure the ammonia that they thought they could.
Right, right, right.
Yes.
Yeah.
Interesting.
So that's one. So the LTD projects will be coming online.
Mhm.
2 is the more uncertain is how many four merchant batteries will come online
Yeah,
or will be
yeah,
connected.
yeah, yeah.
So that's I think those are the 2 big factors.
Mhm.
Going back to the actual grid connections and what you think might be the trajectory going forward.
Mhm.
So Octo did announce a rule change. So they said, so right now, or before the rule change, the initial interconnection, the deposit, IC deposit,
Mhm.
was just 5% of the project
Yeah,
upfront,
yeah,
right?
yeah.
And then you were supposed to cover, I believe, 75%, I believe, towards the latter phase of the project.
Mhm.
But now they've doubled it to 10% upfront.
Oh wow,
So now the upfront cost is double.
interesting. Yeah.
And then they do want you to cover, I believe, 50%
Mhm.
midway through the phase.
Interesting. Yeah, this is going to
So
make sure that a lot of people
yes,
are not just putting in
yep.
the requests and not going through with it.
So a lot of the ones you see here in the blue
Mhm.
is these, let's say, speculators
Yeah.
Yeah.
that are coming in, and
Yeah.
they probably just pay the 5%. They're just
Mhm.
holding the land,
Yeah, yeah,
and they're
yeah.
trying to flip it.
Yeah.
Some of these the landowners are
Mhm.
potentially speculators.
Yeah.
So they pay the 5% up front. They're trying to find off taker or another
Mhm.
buyer for the land.
Yeah.
But one is if there are grid constraints and they cannot secure the grid connection,
Mhm.
maybe they can't find an off taker.
Yeah.
Even if they're the grid connection, maybe because obviously there's been economic constraints and macroeconomic conditions have changed in the last
Mhm.
year or two.
Yeah.
So
Mhm.
it's very possible that some of these in the blue would actually be withdrawn,
Yeah.
right?
Yeah, that makes sense.
And then that's one. And 2 is going forward because Octo did change the rule about
Mhm.
5% or 10% IC
Yeah.
deposit. So I think the pace of this blue part will probably stagnate a little bit the next couple of
Right.
years.
Yeah.
Yeah.
I think that's
Yeah.
going to be quite good because right now it seems that the TSOs are
Yes.
having their hands full.
Yes.
Yes.
Exactly.
Right on. Cool. And then another thing I also wanted to touch upon is more on anything from a modeling return side here. So in the first episode of the Japan Ninja podcast, we talked a little bit about the changes in the revenue structures
Mm.
from a policy perspective that's changing and how this was supposed to go down to the 7.21, if I remember correctly.
Mm.
And there's still some chats around this, and nothing has been 100% finalized yet from a yearly perspective yet. But when we're modeling returns here, do you think this is something that's feasible when we're thinking about modeling returns versus earning into the modeling returns?
I will say that's probably the biggest if factor.
Yeah.
That's the $1 billion question. I think arbitrage, a wholesale market is relatively predictable.
Mhm.
Japan's been pretty stable.
Yeah.
Japan doesn't have negative prices.
Mhm.
Also doesn't have crazy spikes that
Yeah.
you see in other markets.
Yeah,
for
like
example,
Australia. Yeah.
right? On the other hand, ancillary balancing is the bigger if.
Mhm.
That's highly dependent on the what METI decides to do in terms of their regulation, the rule for the market.
Right.
I think that's the biggest probably uncertain factor when modeling
Yeah.
the balancing market, right?
Right.
So we have to build in certain assumptions that are reasonable, logical assumptions.
Mhm.
But also, I think what's really important is we need to think about various scenarios, right? So it's
Yes.
not just deterministic modeling based on one scenario or some sort of high probability scenario that you think will be the central case.
Yeah.
What we need to do is at least have a view on the central or the medium benchmark, but also be cognizant of other scenarios, right?
Yeah.
So, for example, if METI decides to lower the balancing market caps,
Mhm.
then what are the the resulting IRRs?
Yeah,
So we need to think about all these things.
Right.
I think all developers needs to be cognizant of those.
Mhm.
But if they're not, they're going to be just caught wrong-footed,
For
right?
sure. For sure. I think before we jump into more on this, maybe we should take one step back really quick and then go over a little bit more on some of the things that that add into the model. So more on the revenue stack here.
Let's break down the battery revenue stack. When we model BESS in Japan on the merchant side, they typically include capacity markets, balancing markets, and the arbitrage markets. Um, Before we kind of go further, for our listeners that are unfamiliar with these markets, bear with me as I elaborate a little bit more. Capacity markets, Japan's capacity market pays power generators and assets like batteries to be available to supply electricity in the future, typically 4 years ahead, ensuring long term supply security rather than real time energy delivery. So these participants receive fixed payments for committed capacity, but face penalties if they fail to perform when called upon. The balancing market, or EPRX, this is Japan's balancing market that pays flexible assets like batteries and generators to adjust output in real time to keep supply and demand stable on the grid. Unlike Europe, in Japan, this is designed primarily for system reliability rather than trading profit. So revenue comes from fast, accurate response rather than speculative trading. And then we have the arbitrage markets. So this is where you're charging a battery when electricity prices are low and discharging when prices are high, capturing the price spread on the physical market, JEPX. In practice, profits depend heavily on accurate price forecasting and timing, as spreads are inconsistent and increasing competition is compressing the margins. Day ahead market. Electricity is traded 1 day in advance with prices set every 30 minutes based on supply and demand forecasts. It's the main reference price for the market and where most volume is cleared before real time operations. And then intraday, this allows participants to adjust their positions closer to real time as forecasts for demand and renewable generation like solar and wind, they change. In Japan, this is less liquid than day ahead, but increasingly important for managing imbalance risk and optimizing battery dispatch.
Yeah. So if you want to make this a little bit easier, you can look at capacity being like the stable base, and then balancing being opportunity today, and then that's quite competitive, and
Yeah.
then arbitrage is the upside if you execute that correctly or well, right?
Exactly.
Very nice. Now we can basically go back and we can look at more on the LTDA results and understand the modeling side a little bit better here. So when we're looking at the LTDA results, and just a quick explanation here for people who might not be in Japan, LTDA is the Japan's long-term decarbonization auctions, and these provide long-term, so this is typically 20 years, fixed revenue support, and this is typically for low carbon assets like renewables and batteries. And this is actually to encourage investments and ensure future supply security. In return, developers must share most of their market upside, making LTDA-backed projects lower risk, but with capped returns compared to fully merchant models. And this is something we see quite a lot of here in Japan. A lot of the projects are actually following more of the LTDA cycle. And one of the questions that I wanted to bring you in for here, Hayato, is to explain why that actually is. So with the LTDA, you get long-term revenue certainty, but if you outperform the market, around 90% of that upside goes back into the system. So we have the first and the second LTDA round results here. And then for my question, I know this is a little bit of a long one. How is the modeling done, or how does the modeling look like when we're looking at the LTDA and non-LTDA projects here?
The actual underlying the modeling is the same actually. So
Yeah.
you do assume that each project, battery or otherwise,
Yeah.
will participate in capacity arbitrage and balancing.
Mhm.
The only difference is that if you're in LTDA, you cannot participate in the standard T-4 capacity market.
Mhm.
So that's actually the only difference.
Yeah.
So the operationally, it's actually the same. The other difference is, as you mentioned, so you do have to give up about 90% of the merchant revenue.
Yeah.
So that's actually after the fact. So when you operate it, you operate exactly the same way.
Mhm.
Just that afterwards, you do need to report to the TSO and METI saying, "Oh, this is how much
Yeah.
merchant revenue
Yeah.
we generated. So this is how much we're going to refund,
Yeah.
to the government."
Yeah.
Right.
Yeah.
Yeah.
From a modeling perspective, you did say that this is quite similar, but I guess when you're not doing an LTDA project, you don't technically have to model this for a 20-year process, right?
Hmm.
So that will change a little bit from the modeling side. So when you're doing a modeling perspective of LTDA projects, you have to think about long-term revenue, what is it called, degradation or something similar to that for some of the projects. These go quite heavily into BESS projects, for instance, right? So it should be a little bit harder to model this if there are policy changes like we saw, like we're seeing right now. These also change some of the models. So to maybe take it one step back here, does it still create more? I know you get a lot of capital back from the LTDA projects, but is it also quite attractive to not run through LTDA projects? Considering from a modeling perspective, you don't have to run the models for that long.
So it's not just the economic feasibility, but there's other issues. For example, manufacturer warranty.
Yeah.
So most battery manufacturers, I think they do provide 15 years
Okay.
minimum
Okay.
warranty, maybe up to 20 years,
Yeah.
or longer.
Yeah, I actually didn't know that. So yeah, that would make sense from a modeling perspective.
Yep.
It's quite similar.
So if you're running full merchant, I think 10 to 15 years might make more sense.
Yeah. Yeah.
If that's your timeline.
Yeah.
LTDA, as you know, is 20 years as standard.
Yeah.
So when you're bidding into LTDA, you do want the warranty to be at least 20 years.
Yeah.
Right. Yeah.
Right.
Sure.
So that's probably one of the operational constraints you have there.
Because when we're talking about this, it's all on bankability, and the LTDA side makes this a lot more bankable, because you don't have to throw down as much cash from the get go. You're having like a steady flow of money coming through.
Yep.
And sure, you have to give back 90% of the profit, but this is a lot more of a safer bet when we're looking at a newer project. And if we take it back to this graph right here, you have so many people, so many companies that really throw out the Grid Connect contracts. They want to be able to create more projects, but if the winners of the BESS market are the ones who get the LTDA projects, then how come that this number would be as high? Of course, I understand that there's always bankability in a BESS project, but the LTDA is not awarded to that many people. It's not that many projects. Here, when we're looking at the amount of under contract applications for BESS capacity, it's absolutely massive. So I just wanted to get your take on this and why that is.
I think I touched on this earlier. So in the blue part, there's decent amount of speculation. We don't know what percentage.
Yeah.
But it could be the majority. It's very possible. If you go to energy conference in Japan, you would see these, so speculators actually publicizing, advertising their own, projects or land that they've secured.
They want to sell it to developers, and then
Yes.
developers would be able to then use these projects
Yes.
to either go full merchant or apply for LTDA.
Yeah, it's essentially just flipping a house, right?
Mm-hmm.
Yeah, it's very similar. So we don't know for sure, like, what percentage this is speculation, but I would assume it's it's quite high.
Right.
Yeah.
So for the first two rounds of Japan's LTDA auction, the BESS category clearly became one of the most interesting ones. If you're looking at the graph here, so you can see that the bids awarded and the bids not awarded sits very, very heavily on the BESS side, and it's not only for the second LTDA round; it's also in the first one. So in round one, the biggest battery storage winner was Hexa Energy Services, and they won 11 projects, which was about, I think it was 342 megawatts, if I'm remembering correctly. So this is the largest BESS portfolio in that round. Other major winners were Renova. It was Tita Power, which I believe is Canadian Solar, if I'm not mistaken. CHC with 103 megawatts across 4 projects, and Oryx. And then when we're looking at the second round, you had the continued momentum. You saw that the bids not awarded and the bids awarded is still absolutely breaking the charts here.
Yeah, absolutely oversubscribed.
Absolutely oversubscribed. So round two, it was a slightly different cast of winners. So the largest group were the star entities, so star 1, 2, 3, star 1, 2, and 4, for about 254 megawatts combined, and this is through HDRE. And you had Diesel Energy Development Holdings with 237. You had Bison Energy with just under 200. And then you had Nihon Chikuden with 119 megawatts. So Japan's BESS market is no longer only a domestic utility story. You see that the LTDA has become a gateway for a lot of the global infrastructure capital. So foreign developers and specialists in storage platforms to secure long-term contracted revenue here in Japan. Before we get into speculation on the LTDA 3, I just wanted to go back here and see what are some of the issues that we've been facing or that you've maybe heard in the market on some of the LTDA sites. There are certain constraints in different regions. So I'm specifically thinking about something like local grid physical constraints, and then Mehdi might be discussing rolling this out on a national scale. So this will need dedicated lines. And to my understanding, the TSOs will both build this for you, but they will also bill you for this. So this might also completely rewrite the modeling side. So when we're looking at the LTDAs, even if you are winning some of the projects, there will be overlaps, and this can actually go in and be quite an issue on a modeling perspective or from a bankability perspective, similar to what we saw in Hokkaido. So maybe you want to share your thoughts on this a little bit.
First of all, I would say round one. Obviously it was the first OTA round.
Yeah.
So I think people didn't know what to expect, and I would imagine Meti also didn't know.
Right.
So the oversubscription for BESS, maybe to an extent, was expected, but it's probably even more than what Meti expected. And you saw, obviously, international players come in with, foreign-made batteries or BESS modules. So that's why they changed the rules of round two. So they said, if we're given, BESS module manufacturing country of origin, can be only up to 30%. Meaning, for example, if BESS modules come from China, then the max they will procure under LTD would be for round two would have been 30%, right, of the total, right? But even then, you saw that big oversubscription. So for round three, they've already come out and said they're going to restrict this further. They're saying that the BESS manufacturer must be on this METI approved list, which if you check it today is all domestic manufacturers. So they're really tightening the rope now.
Right.
So for round three, I would imagine that you will not see that. Maybe international players would come in, but with domestically manufactured BESS modules, right? That's probably one. And two is just focusing on BESS specifically. They're trying to expand, I think, the scope of BESS. So round one was just free for all. So round two, they split into 3 to 6 hours and 6 hours or longer. And round three, they're talking about LDS, long duration, right? So I think in this round three, you might actually see projects that are non-traditional. For example, maybe CO2 dome gas type of technology that's 10 plus hour duration. Or maybe even electro fuel type of innovative technology that there are manufacturers that claim they can do 100 plus hours. So we might see some of those coming for round three.
New technologies, not just your typical battery technology.
Yes.
Even if you didn't win the LTDA side, you would still get
a lot of unforeseeable circumstances. I think that would be due to a lot of engineering and technical kind of challenges.
But also because it's a very, very new new side of renewables or attaching to renewables in the sector, right? That would also be one of them. So I just wanted to get your thoughts on that. So from a modeling perspective, I know that this is what Endgame does very, very well. And I know that a lot of people in the market right now, they are looking at the modeling side, and this is just to prove that it is very, very difficult.
I guess to account, like, how would Endgame analytics models account for unforeseeable circumstances?
Well, that's also another $1 million question there. So I think, to be honest, it's very difficult to capture all of these unforeseeable circumstances. But
they're unforeseeable for a reason. It's
yes. But at the same time, we've seen the last year or two, what has actually occurred, right? So you have TSOs and EPCOs, asking for dedicated lines, maybe grid upgrades when the capacity is not sufficient for that grid connection point. So I think we can try to account for that, maybe build in some sort of contingency, or if it's a specific project in a specific region, we can try to find out, recent projects, what kind of constraints or issues they've run into.
Right.
We can try to model that within our own model, right?
Mm.
I think that's what we'll focus on in terms of building out our power market model for Japan.
Yep.
Is
Yeah.
that understand each region's specific constraint
Right.
and I guess recent issues that have occurred.
Yeah.
Yeah.
I think this is where you guys can also come in as more of like the second hand modeling side for this. If you have the modeling end done on the developer side and the off-taker side, then having the second look on this would also be extremely feasible, but very, very important for both of these parties, right? And I guess that's where Endgame can also come in as more of like a
To
safety
be
net.
the second opinion
Yeah,
for developers when they're working with other consulting firms for working on these models.
for sure. Yeah.
Yeah, we'd be happy to provide a second opinion for other consultant revenue forecasts,
Yep.
or if a developer or operator, they have their own models that they
Mhm.
would like us to maybe provide a second opinion or confirmation.
Yeah.
Hmm.
Yeah.
Then
Yeah.
we'd be happy to provide that service.
Yeah. I
Yeah.
think that makes perfect sense.
When we're modeling for these battery models, would you see a trend moving towards more arbitrage trading rather than fixating on the balancing market EPRX right now?
Well, we've seen that in other markets already. So overseas markets, Australia, UK, for example. I think a couple of years ago, they were also heavy on ancillary markets or balancing market in Japan.
Mm.
But
Mhm.
now I think these days it's much more towards arbitrage or wholesale.
Yeah.
So I think Japan will probably see something similar.
Yeah. Yeah.
The question is, how quickly would that happen? So that is a big if or big when.
Yeah.
Um, it really depends on one, what is your assumption on best penetration in Japan?
Right.
Two, what is your assumption on balancing price caps and regulations around
Mhm.
it?
Yeah.
And three is, what is your assumption on I guess a renewable deployment, because that also affects how much frequency service is deployed, right?
Right. Right. Right.
Mhm.
So all of those combined, it's a lot of moving factors and moving variables. At least we think in Japan, balancing markets will be the main source of revenue for the next couple of years,
Yeah.
minimum. 2030 onward, that becomes more of uncertain regime. Yeah.
Mhm.
Mhm. Sure, there's been a lot of discussions on kind of the upside for batteries. And I think with the recent changes to the balancing market, a lot of the foreign developers have been saying now this has been affecting a lot of their IRRs. But I think for those serious long term developers that understand the trends coming from Europe, coming from Australia, they would understand that this is a trend that is bound to happen. So instead of banking everything just on the balancing market, you're going to need a dynamic kind of revenue stack. I guess my question would be, what would you think would the percentages of the different revenue streams be? Would that be, let's say, 50% on arbitrage trading, and then 30% on balancing, and then 20% on the capacity markets? Or what would be your kind of rough idea?
I
Or
think
does that really depend on each strategy, on each location, on each battery make as well?
so. That's definitely true. Like it would depend on each region in terms of how much balancing services are being procured or being needed.
That's right. Yeah.
So each of the 9 regions do have a little bit of variability there. So
Mm.
that's
And there are
one.
different unique features. Yeah.
Yes,
You look at Kyushu, you look at Hokkaido, they're going to have different types of, yeah, renewable penetration. Yeah.
exactly.
So that's going to be very different as well.
So that's probably the biggest factor there. In terms of ranges, I would say initially, even today, probably most of your revenue would come from, most being more than half, would come from ancillary services, balancing market.
Right.
Hmm.
As I mentioned, maybe 2030 onward, it's very possible that it will lean more towards wholesale arbitrage.
Right.
Mm.
Right.
And I would suspect in 20 years' time, we'll be really focused on arbitrage
Mhm.
specifically.
Yeah. Yeah. Yeah.
Yes.
I see. And earlier we were just discussing because this whole time we had thought that with the LTDA, so obviously on the upside, you're going to have to feed 90% of the profit back into the system. But Hayato, you were mentioning that a lot of these developers, once they win the projects, they're actually incentivized to try to speed up the construction and go to COD straight away. So this way, there is some time lag before you actually have to enact that 90% of profit going back into the system, and they can actually withhold all 100% of profits.
Yeah. So for LTDA, each technology has a certain, build deadline.
Mhm.
So for batteries, it's actually 4 years today. So if you win the LTD today, you have to be operational within 4 years.
Right.
But prior to that, if you become operational before that period, then you can run it full merchant and keep 100% of revenue. So you're strongly incentivized to, quickly build these out.
Yeah.
Right.
And if you do become operational, let's say a year or two before the LTDA period starts, then yeah, you are 100% in the clear.
Right on. Yeah, that's a lot of money to be made on that end, right? Yeah, no, that makes perfect sense. I think I know I know I keep mentioning the modeling front on this. But yeah, if we're looking at the modeling side, I know that with the LTDA, essentially this would be a 20-year outlook. But yeah, if you can run the COD a lot faster, and let's say you have like 4 years to do this, but you run it and you have it operational running after 2 years, this is amazing because for 2 years you're getting a massive plus on top of this, right?
Yeah.
From a modeling perspective, this is something that you also have to account for. But you also now have to learn. Now you also have to think about how long does the battery last, right? Because you have to plus an extra 2 years onto this modeling side, and there are a lot of unforeseeable problems with this at the end stages of a battery's life, right? From anything from degradation. Of course, I understand that the modeling front of this, you make so much gain in those 2 years that this is, of course, a surplus. But do you think this can also lead to a few issues in the long run of things when you're getting past those 20 years?
First of all, I mean, if you do run full merchant, let's say 1 or 2 years before the LTDA period starts,
Yeah.
then there's issue of potentially degrading your battery more than you've modeled for,
Right.
right? So,
Yeah,
if
exactly.
you're running 22 years versus 20, then
Mhm.
you do have the 2 extra years that you
Yeah.
need to account for. That's
Yeah.
one. Two is the manufacturer warranty itself. So
Exactly.
I
Yeah.
think it's possible some of them offer beyond 20 years, but I believe 15, 20 years is standard.
Yeah.
So
Yeah.
if you're going to run it 25 years, for example,
Yeah.
you need to think about, the extra 5 years. What are you going to
Yeah.
do, right?
Yeah.
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 Mhm. And what sort of IRRs are we looking at then? If, let's say, a typical LTDA project versus one that has those 2 years as 100% withholding your own profits, like what would be the IRR numbers?
Also, LTD itself has a specific rule saying that, the WACC or the IRR must be 5% or less.
Mm-hmm.
So essentially, just LTD payments in itself will be roughly 5% IRR.
Mm.
So on top of that, if you're running, merchant revenue over the next 20 years, you give up 90%, you still keep 10%. So that
Yeah.
might add a couple more percentage points,
Right.
right? So I would say for LTDA projects, high single digits would be actually quite good.
Mm.
Understood.
For full merchant, it really depends on many factors. Your capex, um, how well you run it in terms of optimization,
Mhm.
and three is how long you run it as well. So, if you run double digits, I think that's quite good for full merchant batteries.
Yeah.
10% or higher.
Yeah.
But I think given where the market is in Japan today, might be difficult to achieve it.
Sure. It seems that it's still generally we still have to go towards the LTDA strategy if you want to scale up with a lot of these projects throughout
Hmm.
Japan.
Yes.
When everyone is modeling battery returns in Japan, very few actually realize them. How would Endgame Analytics help customers on this end?
So Endgame, we are an independent, consulting firm
Mhm.
focused on the energy and infrastructure sector. So we have quite a lot of track record in Australia.
Yep.
We have looked at not just renewables, but also infrastructure projects
Yeah.
across Australia. We are going to bring that success to Japan. So I myself have direct experience in this area. Also, our local head of research, Japan, has nearly 2 decades of experience covering the Japan power market
Mm.
Right.
sector. So that's one. Maybe second is we are highly mathematical and quantitative.
Mhm.
So many of our modelers have mathematical or quantitative training.
Yep.
They're the ones actually building the model itself, right? So we pride ourselves in our technical capabilities. That's second. The third, I would say that we focus on bespoke solutions. So for each client, we think about their needs, deep dive, what they really need.
Mhm.
And we build out custom bespoke solutions for them.
Yeah.
So we don't have just one model that we tweak slightly for each client, but
Right.
we actually strive for actually building them out for
Yeah.
each client.
Yeah.
And we are aiming to do that, for Japan as well.
Right. Yeah, and I think bringing it back to the podcast and what we've talked about so far, I think this is something that because you're doing this on an ad hoc basis as well, I think the adding endgame analytics as the consulting branch before you start different projects, but also as the second opinion, is also something that could be quite interesting from a perspective of you and your company.
Yeah, I really like that on the second opinion that earlier how we were kind of discussing on, because I always thought as a battery energy storage developer, the easier way to develop would be to engage in a tolling agreement. So this way, they don't need to, the developers itself wouldn't need to understand the power markets or the mechanisms of the power markets. And it's just up to the toller or the off-taker to be running that. But out of what you were mentioning earlier was that it is actually still important for the developer to understand how much their projects or how much the actual battery project is, how much value the actual battery project can actually bring. Otherwise, during the negotiation stage with the different tollers, they wouldn't be compensated fairly. So,
Yeah.
no, that part I didn't know that it's actually so crucial for developers to work with advisory firms like Endgame Analytics.
So I think for standard batteries and also, let's say, vanilla solar wind projects, there's many consultants covering this space.
Yeah.
And, one is, we would happy to be a second opinion provider. That's something that we've also done in Australia.
Mhm.
But two, I did touch on bespoke solutions. So there are new technologies coming into the power market. Not just let's say ammonia, hydrogen co-firing, but also let's say the CO2 dome gas storage,
Right.
for
Yeah.
example.
Like
So
newer tech on that.
exactly. So I think for these new innovative technologies, we can build out custom solutions that work out better than a, let's say, standard, best storage solution.
Yeah. Right on.
Yes.
Yeah, I think that having that flexibility on that is definitely something that'll pull you guys apart from others. So
Mhm.
very, very nice. Right. So this has been the Japan Energy Podcast. Thank you so much for coming to the episode today, Hayato, and for sharing your knowledge on the BESS sector and also on the LTDAs. I think this is something a lot of people are quite interested in the market right now, and with everything that's kind of changing on a policy perspective and anything from modeling sides and how difficult this actually is, I think is definitely interesting on their end. Yeah, thank you so much for joining us, and for the listeners and everyone watching, thank you so much, and be sure to subscribe to us on YouTube, Spotify, Apple Podcast, and also to follow our LinkedIn page. One really cool thing is that Apple Podcast actually just added a video feature. So for the people who don't want to see our faces, well, unfortunately, it will be added on there on Spotify and also on Apple Podcasts.
They can
So
still toggle it off, I think, if they don't want to see us.
there's no escaping. There's no escaping from this now. But this definitely helps on the graph side. But yeah, thank you so much, Hayato. We really appreciate it.
Thank you,
Thank you
Hayato.
for having me. Thank you. The reality is messier, slower, and more constrained than most spreadsheets assume. So that's one quote.